Good morning and welcome to the internet's only daily live housing show. The Hot Sheet covers what you need to know about the real estate industry in a 24-hour time period. On today's Hot Sheet, I will discuss housing inventory, June's builder confidence score, and new residential construction. Today is Tuesday, June 20th, 2023. I am Byron Lazine, and the Hot Sheet starts now. Hit the thumbs up, and if you're live on YouTube, let me know in the comments where you are tuning in from. As we do on typically Mondays, but with the holiday yesterday and the markets closed, we will cover it today on Tuesday. Let's jump right into our weekly active inventory update. Active inventory grew 8,041 for the week. We're still looking for double-digit inventory increases there. We'd like to start seeing numbers come in on a weekly rate of 10,000 or more. We're yet to see that, but still positive that we're going in the right direction. Any active inventory in the upwards direction can be helpful for affordability for housing. Okay, so let's just take a look at a couple of charts. By the way, the charts now, the sources are over on BAMX. So the daily download link is gone. We've been doing the daily download link, which has been getting it opened at 70 and 80% every day. The daily download link is gone. Now go over to BAMX to get access to all of the charts. There's obviously a link down below for you to get into BAMX, but that's where the Hot Sheet downloads and sources is going to be hosted. All right, so let's take a look at the charts that are available in there today. And we have backlog June as well. Weekly inventory change rose from 443,000 to 451,000 the same week last year. We went from 392 to 415. You can see last year's active inventory and this year's gap is starting to close. Last year was the all-time low, of course. And we are now starting, as we are not accumulating enough new listing inventory, which we're going to take a look at in a second, closing that gap. I think by July, we could be basically dead heap even with 2022. The inventory bottom for 22 was 240,000. The peak so far this year has been 472,000 plus. Active listings in 2015 at this week were almost 1.2 million. So we are a third basically of, a little greater than a third of where we were in 2015 at this time. When we take a look at total inventory, that black and green line, which is 2022 and 2023, is incredibly close. When are we going to touch here? I think in the next couple of weeks, it looks like. And because we're not shooting up, we're not getting those 10,000, 15,000 weekly active numbers. This line could go underneath 2022 in the second half of the year. Inventory from July through December might just be less than 2022 for active inventory. Remains to be seen. We'll keep an eye on it. New listings, of course, is what's slowing down the inventory. You can see new listings continues to trend at an all-time low for new listings hitting the market. We're at 63,000 for the week. This is a flat number at a time period where you typically will see, we've been flat here since, middle of April, when you typically will see, in like we did in 2022 and 2023, trends going up for new listings. Those late to the market, late spring listers really take advantage of mid-April to about July. Not happening here, as we're just trending along this line of about 63,000. 2022 and 2023 were much greater than we are here today. How much greater? Well, 2022 was almost 90,000 for the same week in last year for new listings. 2021 was almost 83,000. So new listings sitting at just over 63,000, far off of levels that are even close to normal. And certainly now we're trending towards all-time low. If you go back years prior to 2020, those numbers are even higher. Okay. NAR, how they calculate inventory is all of the properties that are active that we just went through, as well as the pending sales or the escrow sales. So NAR total inventory levels is historically between 2 and 2.5 million. Currently, we are at 1.04 million, and the peak in 2007 was over 4 million. We are really far off from the great financial crisis inventory levels we headed into 2008. We are 25% of that number, and we're 1 million to 1.5 million off of historical normal inventory levels. So still a long way to go overall in inventory, but we're starting to see a little bit of improvement week over week, and hopefully that number will continue because it's certainly holding back the big number that agents care about, which is the existing home sale number. If you take a look at this chart from advisorperspectives.com as of April, you can see here that existing home sales were seasonally annual average. Again, the source here is, or the chart is Advisor Perspectives, but the source is NAR at 4.28 million. And the last 12 months, it's just been on a straight decline. We were up over 5.5 million the April prior, and we were up over 6 million before that. And so this line is dropping straight down as inventory continues to constrain the market. One winner in a low inventory time frame right now would be builders. Builder confidence moves into positive territory in June. So solid demand. Obviously, there is still demand out there for home shoppers. There's lack of this existing inventory that we're talking about. And finally, a improving supply chain efficiency has helped shift builder confidence into a positive territory for the first time in 11 months. This improving supply chain is a real thing. You will still hear a lot of contractors trying to jam you and use this supply chain excuse. It's like a 6-month-old excuse. So tell them to cut it out because they're still using it. They're still playing it up to their advantage. The supply chain for building materials is pretty consistent right now overall. There may be a few things here and there, but they're still rolling that excuse out. I think a better excuse would just be lack of labor support. That's one that you should roll with. I can buy into that. But the supply chain issues have been overall corrected. Builder confidence in the market for newly built single-family homes in June rose 5 points to 55, according to National Association of Home Builders / Wells Fargo Housing Market Index. So they release this HMI every single month. They released this one yesterday, and it marks the 6th straight month that builder confidence has increased. And again, the first time the level has surpassed the midpoint of 50 since July of 2022. Anything over 50 is an optimistic builder, while under 50 would be pessimistic. Builders are feeling cautiously optimistic about market conditions given low levels of existing home inventory and ongoing gradual improvement for supply chains, says NAHB Chairman Alicia Huey, a custom home builder and developer from Birmingham, Alabama. However, she says access for builder and developer loans has become more difficult to obtain over the last year. So while credit has tightened up, and we've talked about this on past streams, and there's builder confidence right now, we know there's certainly demand. How many of them are going to be able to get the access to the cash that they need to go out and build these homes? That remains the biggest question. This will ultimately result in lower lot supplies as the industry tries to expand off of cycle lows. Okay, so interesting there that builders, as they forecast out, they believe the biggest hurdle is going to be getting access to cash. If any bank is paying attention, and maybe it's just because of the constraints of CRA, of the office, real estate that they're holding, that they can't free up this cash. We know credit's tightened quite a bit with banks, but this would seem like a good bet to go out and build, especially if they're building anywhere close to the affordable price point, to go out, let them build. We're anywhere between 2 and 7 million homes short to meet supply. Seems like a home run for banks. Shelter cost growth is now the leading source of inflation, and such costs can only be tamed by building more affordable, attainable housing for sale, for rent, multifamily, and single family. I would love to just see more single family affordable housing. By addressing supply chain issues of skilled labor shortage and reducing or eliminating inefficient regulatory policies, agree, such as exclusionary zoning, policymakers play an important and much needed role in the fight against inflation. This is Dietz, who is the NAHB chief economist, Robert Dietz. We've got some charts on this. Of course, you got to go into BAMX to get these charts. Now the daily download has gone away, but we've got it all stocked up for you here today to show exactly what's going on with builder confidence as we sit here right now. So here you go. We're back up to that over 50 level. It's the first time since in 11 months. And you've seen these sharp declines when obviously in March of 2020, we had a sharp decline in builder confidence. And then again, we experienced that sharp decline as the interest rates ratcheted up last year, but it's been on a steady increase since that point, since they've kind of leveled off at the 7 mark. And we've been bouncing around since then between 6 and 7, of course. And we're well above the confidence levels of, 2006 all the way until 2000 and say 15 when we got back to a consistent 50 mark. Years prior, builders outside of the 1990-91 recession, builders were consistently above the 50 mark. You had a little dip there in 95, 96, and then in that .com recession, you had a little dip for a short period of time below it as well. But for the most part, living above the 50 confidence score until we saw the gap in the great financial crisis and these two short spikes that we have recently experienced, with the nation being 2 to 7 million homes short of supply. This number you would expect it to sit over 50 if they can build that affordable product. So there's good news there for the way the builders feel, and they're going to continue to build. There's one interesting updated graph from Calculated Risk newsletter from the previous 4 periods of 78 to 82, 89 to 93, 2005 to 2020, and current. So they're calling this new home sales for busts. And so let's take a look at the chart here. I'll show you guys this, and it's obviously available down below in BAMX. Okay, so new home sales, and this is a little bit more good news because you can see here from the 100, the prior peak, you could see that the drops of say 78 to 86 were far more significant, and 2025 to 2020 were far more significantly lower than what we're currently now experiencing with the bounce up. The outlier here would be 89 to 93, which was shorter span before the increase. But we're kind of following that trend of 89 to 93, where we've got a short decline and then a bounce up months after the prior peak. So it looks like we are on the way up. We'll continue to take a look at that and see if that's the case. Okay. One thing that is also helping builders, and as referenced on the first topic when we updated inventory this week, is the fact that right now new homes makes up 25 or just about 25% of total inventory. New homes hasn't been over 20% really ever, except until 2021, when we saw inventory start to decline because of the demand for housing, the highest prior to 2021, that the percent of total inventory for new homes was in 95, 96, 97 timeframe, when we got around 16 to 18%. We never even went above 15% again until 2019 and 20, when we started touching 15% and above. And now we're sitting at or above 25% the last couple of years for the percent of total inventory. for new homes. Good for builders, not great for home shoppers, as the average price for new homes in America is $550,000. The median price is $450,000. So well above, starter home price points and well above affordable price points in almost every market in America. So 25% in basically historically low inventory levels. 25% of that is new and not obtainable for a lot of buyers. So that constrains inventory even more. But there is some news that was just released today. This is straight from the census.gov site. And we'll put the charts down below in BAMX for you so you can grab those. BAMX is now the only place to get all the sources from Hot Sheet. You want to consume all of that there. And today's report from the U.S. Census Bureau and U.S. Department of Housing and Urban Development, they jointly announced the following new residential construction stats for May 2023. Okay, so new residential construction, and I've carved these out and put them down below for you again in BAMX, would be building permits of 1,491 million for May 2023. Housing starts at 1.631 million. Housing completions at 15818 million. Okay, the next release will be July 19th. These numbers are all up from the revised numbers in April. I'll get to what that means in just a second. These are seasonally adjusted annual rate for new residential construction. And you can see here that after kind of hitting a little bit of a bottom, the end of 22, beginning of 23, all of these numbers, permits, starts, and completions are up, but they are not to the levels of 2020 and 21 outside of completions. Permits and starts in 20 and 21 started to really go up, well above anything we've seen the last 5 or 6 years to meet demand. Those numbers are down, but completions are up towards the highest point that we've seen in recent memory. So good to be adding completions into the market to help out inventory. Okay, so here's some more numbers on this. Building permits, privately owned housing units authorized by building permits in May were, again, seasonally adjusted at 1.491 million. This is 5.2% above the revised April rate of 1.417. It's 12.7%, though, below May of 2022 when the rate was 1.708. So this is seasonally adjusted for the year. And you may see next month this get adjusted down. Okay, it's what happened when we revised April. This number went down. Could be the case, but right now the number looks pretty good. Single family authorizations in May out of that number were at a rate of 897,000. Okay, so this is a 4.8% above the revised April figure of 856,000. Authorizations of units in buildings with 5 units or more were at a rate of 542,000. Okay, so we're under a million single family on the seasonally adjusted rate because 542,000 of these units are units of 5 or more, which we already have plenty of that inventory coming out the end of this year. There's going to be a glut of it. You've heard me talk about that, and that's why rents are going down. So we don't necessarily need more of that in most markets, but we are getting more of those big multifamily that makes up essentially over 1/3 of these total building permits. Housing starts, privately owned housing starts in May were at a seasonally adjusted rate of 1.631 million. This is 21.7% above the revised April estimate of 1.34 million, and it's 5.7% above the May 2022 rate of over 1.5 million. So huge numbers on housing starts when they're actually, putting the shovel in the ground and getting these things going. Single family housing starts in May were at a rate of 997,000, almost a million. It's an 18.5% above the revised April figure of 841. So these housing start numbers are coming in huge. That shows you the supply chain is not nearly the issue some excuse makers may make it out to be right now. The May rate for units in buildings with 5 units or more was 624,000. Housing completions, this is what actually helps inventory. Privately owned housing completions in May were at a seasonally adjusted rate of over 1.5 million. This is 9.5% above the revised April rate of under 1.4. It's 5% above the May 2022 rate of over 1.4. Housing completions above the May 2022 rate. So completions now starting to catch up and get onto the market. This is helpful for inventory. This is a good sign overall, albeit that these prices come in at a $550,000 average price point across the country. Single family housing completions in May were at a rate of over a million. This is 3.9% above the revised April rate of under a million. And the May rate for units in buildings with 5 units or more was 493,000. You're going to see that number go up on completions here as we close out the year month over month. I would expect that number to continue to go up. This Census Bureau release that was report that was released today has a bunch of data in their season for different regions. If you want to get into some of the regions, you can go and grab that. They've got the Northwest, the Midwest, South, and West all dialed in there for you and showing the differences and breaking those down if you want to relate that back to your market. In every market right now, the 10-year is, let's take a look across the country here, is down a little bit, 3.724, but it's holding very strong right now. And that is in line with what we said last week, where economists believe that this 30-year fix, this 10-year and this 30-year, because the 30-year follows the 10-year, of course, are going to be moving sideways. I mean, if the last 6 readings don't show us that, 692 on the Mortgage News Daily's daily reading to yesterday 695, in between you had a bunch of 6.9s. I mean, that's the reality of where we're at right now. We're at a 6.9+% interest rate. Freddie Mac's 30-year fixed weekly survey had us at 6.69, and we've had reductions on that from 6.79 to 6.71 to 6.69 over the last 3 weeks on the weekly survey. But we're hanging on the daily survey up over 6.9. So again, depending on credit score and location and all of this stuff, this can influence that. But I would not expect much changes here today, just looking at the 10-year. If you haven't done it already, make sure you go over to the link down below, get into BAMX. It's where you're going to be able to get all the sources and charts and slides every single day from the hot sheet. Really appreciate you guys tuning in as we start off the week. I'll see you later on today on the YouTube channel at 2 p.m. for the Real Word podcast. And until then, or tomorrow morning, toodaloo.